Good morning and welcome to the Saxo Bank Morning Call. It is Monday, February 11th, and we closed last week on a pretty ugly note, risk appetite-wise. A lot of that driven, at least headline-wise, by some discouraging noise out of the Trump administration on the prospects or the status of the current trade negotiations, especially from Kudlow, and then Trump saying that he's not going to meet with his counterpart Xi Jinping of China before that March 1st deadline. Peter, you can't see any problems in the Asian markets, at least Chinese markets, over the weekend or to start the week here.
No, we are off to a flying start after a week's holiday. If you look at the chart, we just broke out of that area I painted before we went into the 1 week holiday period in China. And as you can see here, we've staged a pretty significant breakout in the CSI 308. That's talks in China about this, something called a tech board in Shanghai. So we have had that similar board in Shenzhen, but now it's also being made in Shanghai. It seems like authorities in China is trying to construct a new board inside the stock market to really, bolster sentiment. And we are up almost 1.7%. I think this is pretty significant. But I have another chart with us from South Korea, which is telling a little bit of a different story. As I wrote in some of my equity updates, I think we should put more weight on South Korea in general, both on their macroeconomic data, exports, but also the market. As you can see here, not a very firm bounce back from last week's rout. So.
And then broad brush, we're talking about the prospects for a trade deal. Do we just get the headline that it's China's going to make some announcements of buying some things, but maybe avoid the worst, incremental increases in that tariff schedule to 25%. But the deeper level, the whole national security angle, intellectual property, all these things. And you pointed out this morning, we had a discussion before the call, that companies may be making their own decisions completely outside of the context of the whole U.S.-China negotiation process.
Exactly. I happens to be a shareholder of a robotics company called iRobot. It's Massachusetts, born out of MIT. And in their Q4 conference call, there is this transcript, as you can see here on the slide. I've marked with red some very interesting comments, which goes to your initial take here, John. They say the pressure brought to bear by rising labor costs, forced technology transfer, and intellectual property theft has forced iRobot, which has produced robots in China since 2002, to find new production facilities in other countries, and they're starting already now in 2019. And this company, by the way, has the second most promising patent portfolio. That's just a study done every year by MIT. So this is a pure technology company that is making, as you say, their own decisions. And I think this is regardless of where we headed with the trade deal. And I'm pretty sure that if iRobot is doing this, other companies are doing the same thing.
You've seen a number of stories, so this is just a very specific example of it.
Yeah.
Switching over to foreign exchange and a little bit still out in Asia, we're talking about the Australian dollar, for example, where we've seen the big markdown in the Aussie on the latest RBA comments in the wake of the RBA meeting. You can see a chart here of Aussie dollar marked down so heavily, a lot of crosswinds buffeting Aussie. We've got the negative RBA comments, the idea that the RBA could be heading for cuts later this year. But iron ore futures, you see the chart here, went limit up overnight. Some of this on supply fears. We're looking at that dam disaster in Brazil, where we saw some production shut down in Brazil of iron ore. The problem was that not the specific supply impact of that one dam, but the idea that there are many other dams of this type that could be impacted by heavy rains, etc. So those supply fears feeding a huge spike here. Question is, what kind of impact does this have? This is a supply situation, not a demand situation, leading to strength. So. Interesting to see. I certainly would be wary of being long steel-related things. But Peter, you looked at some of the, of course, the prices going up is the iron ore. So you looked at some of the miners, and their price performance has picked up here in the near term. Yeah,
they have. If you look at the chart here, you can see that BHP Billiton, which is one of the biggest iron ore producers, that's the black line, and then it's a little bit difficult to see, but the black line follows another line, which is the general MSCI World Metals and Mining Index, and as you can see, it was trailing the general market from around just a few days after Christmas by around 5 percentage points, and that accident from Vale in Brazil really kickstarted a massive rally. But I think interestingly enough, you're seeing the iron ore future still going higher, but you're actually seeing a rollover now in the mining companies. I don't really think it's that sustainable in the long run. As
the forward prices, they are in backwardation. The forward prices are coming down, but it is having a near term impact. So on dollar China, they're back online this week. We saw the official dollar CNY rate marked considerably higher. So if you look at the chart here, we have the dollar CNH. We can see that this whole episode below 65, for now at least, the Chinese regime not signaling that they want to keep the price that much higher. Part of this a product of dollar strength as well, but it becoming a little bit of a non-factor here locally. The CNY. The former CNY strength, now that that has flattened out, and it really is key here. The dollar outlook, we're broad brush looking at the dollar. We're seeing the dollar up at major resistance levels, so support levels. If you're looking at euro dollar, 113 is a huge level, as you saw on the chart there. That is, we've been trading there for, I can't even count the weeks, probably 3 months plus. 113, we're breaking that, and we also in dollar yen, we never really consolidated lower. Interesting thing being there, we're getting risk off rolling over. We see U.S. yields lower across the curve, and yet dollar yen seems very well supported. Another focus point this week, we have a Riksbank meeting up on Wednesday. Key decision time. I wrote a piece about this online. I think we're headed for an interesting inflection point potentially from the Riksbank. They've been talking about normalization, and yet you have an economy that is very leveraged to exports, especially to Europe. European economy clearly suffering. So that is not looking good for the outlook for Sweden. And as well, they are already heading into a housing collapse, or at least an impact to their housing bubble, and their rates are still negative. They've only achieved one rate hike. So we have the Riksbank up. You can see on the chart here how the Swedish krona has been struggling mightily. Valuation perspective, yes, the Swedish krona is very cheap. But if Riksbank sort of gives the signal that if the economic outlook is weakening and if deflation fears are back on the rise, it is perfectly willing to take a hit to the currency. It has been very willing to introduce that currency angle to its policy outlook before. We could see even lower levels in the Swedish krona. Also look at the dollar versus Swedish krona chart, which we highlighted as well last week. So an interesting week for the Swedish krona this week. Now, to our calendars, Peter, we still have the last bit of the earnings season underway here, so you've got some earnings highlights.
Yeah, there's around 330 companies reporting this week. There's not many major earnings releases today, so most of them are starting tomorrow. If you look at the calendar, the big one is Baidu, the Chinese equivalent to Google. Always interesting, especially with all the focus that has been on Chinese technology companies today. And then we have Kering, which has the luxury angle. Always interesting to see, especially with the weakness we have observed in Asia. So I will be keeping a watch on that. And then on Thursday, Schneider Electric could be interesting. It's sort of the equivalent of General Electric and United Technologies out of the US. But I think Airbus is more interesting. And then we have the Nvidia, which were a big mover. Last time they reported where they had that overhang of excess inventory from the collapse out of the crypto space. I think that Nvidia is going to be sort of the highlight of this week in terms of earnings releases. Obviously, Friday morning I'll give my perspective on what's going on with Nvidia.
And I'm certainly not an expert, but a lot of talk on the Airbus side of things, A380, and whether this program is in danger there longer term. And then on to the macro calendar, we've got a bit of UK data, the first estimate of Q4 GDP, trade balance, and manufacturing production, but all eyes on Brexit there, where it looked like we're in a game of chicken. And the question is, as we get towards the end of February, whether Parliament takes control, at least to avoid a cliff edge Brexit heading into March 29th. I don't think we're going to have developments there until uncomfortably late in the process. And then overnight, look out for Australia. Home loans, everything sensitive out there to the housing situation as prices have rolled over so aggressively in Australia. As well, the NAB survey has rolled over badly, suggesting business confidence is increasingly negative in Australia. And then the highlights for this week, central bank-wise, Wednesday, the RBNZ from New Zealand and the Riksbank from Sweden, as we discussed earlier. So that's your week ahead, and we'll be back tomorrow with the Saxo Bank Morning Call. Thanks for joining.